thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We like to give you the inside information as to what's driving interest rates on a daily basis. It could be something from economic data, or it could be something from headline news, geopolitical, or sometimes it's just the sentiment in the markets that may be driving it. Whereas sometimes good news is bad news, or vice versa. And if you're just watching the news, you may not realize what really is impacting these mortgage rates. So we're here to present that for you. So if you're in the market you're looking to refinance or purchase, you're probably following rates. Well, we're here to be a good guide for you guys to help you guys make an informed decision as to whether if you want to lock in or if you want to kind of hold off a little bit and decide for yourself. At least give the data out to you and let you decide for yourself. A little bit about myself is I am a loan officer. I do work with a national lender. We're here to help out in any capacity, whether if you're looking for questions on uh, where mortgage rates are moving, or if you're looking at mortgage programs that are available out there. Uh, we're here to answer any questions. We love to earn your business, so please reach out. Whether if it's a refinance or purchase, again, we're here and we'd love to be able to talk to you a little bit about how we can help you folks out. Without further ado, we'll jump right into this. Economic data, as you can see here, it's pretty blank. We don't have any economic data per se uh, to report. We do got the FOMC meeting, which is the Fed's two-day meeting. They begin today. Tomorrow, they'll give their rate decision, which we don't expect them to raise any rates, but they may touch on approximately when they may start raising rates. There's speculation that they could be beginning maybe middle of next year. Now, in this next meeting tomorrow, it is highly anticipated that they will be uh, discussing their tapering plans. Now, it could be immediately or maybe starting in December. So it looks like it could be starting pretty quickly as to when exactly they'll start tapering. And what does tapering mean? It means that to create liquidity in the markets, they came out with what they call quantitative easing programs, where they were buying mortgage-backed securities and treasuries on a monthly basis and to create liquidity in the marketplace. So what will happen is this created more demand, which is what helped improve mortgage rates during this time period. So now they're going to start buying less of it until they basically uh, stop buying the excess of it, but probably most likely by March is when the time periods they've been kind of discussing. We'll learn more about that tomorrow, but most likely they'll probably figure that they will stop by March. And what does that mean? Well, again, less demand for mortgage-backed securities and treasuries, which will mean obviously rates will start creeping up a bit higher as well. So be prepared for the rates to continue rising, long-term rates here. Uh, this week we also got jobs data, so look, keep in mind we do got jobs data. Tomorrow will be ADP, which will be private payrolls, and then every Thursday we get the initial jobless claims, and then Friday we'll get the Bureau of Labor Statistics data like non-farm payrolls as well as looking at the unemployment number. But another item I want to look at more carefully would be the labor participation rate because as we see in the news, there are people who are refusing the vax mandates, and as a result, they're losing their jobs. Now, how much of an impact this might be, we don't know yet. But they're not being allowed to collect unemployment, so they won't be on these numbers here, like the initial jobless claims, or they won't be on the unemployment number. So the only number we might be able to find them on is the labor participation rate. So we'll have to kind of wait and see how much of an impact that could potentially be in the process here. Now, stocks are up today. I did check over earlier today. They are up in positive territory. They're basically taking the cue. What they've been doing for a while now is liking the Q3 earnings reports. They've been showing some robust numbers here. However, they're not looking too far ahead. They're just kind of taking the present, and a lot of these companies have narrowed their projections to be more cautious ahead because they do feel that the supply chain and the labor and the inflation is going to erode some of that business away further. So they do sense that fourth quarter could be not as rosy as the third quarter. So we'll have to wait and see here. So let's go ahead and take a look at what's going on with the mortgage-backed securities and what mortgage rates are doing today. We were fortunate. Yesterday we did break above the 25-day moving average. When we were doing this report, it kept holding and holding and holding. As you saw here, pretty much all last week. It was holding. Yesterday it broke a little bit above it. Today we're up a bit, even was higher, but we're showing some weakness here. So we need to really watch this to see if this weakness persists. Because if this weakness persists, that could be a reversal where we'll break back below this 25-day moving average. So this may not stick for very long. So be very cautious. Right now we're only up 2 basis points. Basically, pricing should remain about what we saw yesterday as a result. So pricing should be very similar to what we saw yesterday. So we don't really have much of a change on that. So here's what it looked like today. As you saw, we were upwards. We've been going down a little bit, came back up. Now we're coming back down, coming back up a little bit again, and coming back down. So a little bit of volatility there. A lot of it has to do with, of course, projections of where they want to place themselves ahead of the FOMC decision. So this is kind of their maneuvering of where they want to be. And stocks will probably be doing something very similar as well. Uh, come by this afternoon here. And then treasuries, we did break below the 25-day moving average, including that technical we saw yesterday. So we were above that, and we did come down below it. So right now we're between the 25-day moving average and another technical floor here, and sitting right about 1.54 on the New York. I'm sorry, on the 10-year Treasury right here. Now, as for national average for mortgage rates, let's take a look here. We got 30-year fixed at 3.18, and we got the 15-year at 2.57. So, what is these averages? These are basically based on conforming loan limits, and they do have points built into these. So, these aren't like no point loans. These are basically points. That's why you kind of see them on that. Where if you go to a lender, they'll usually report to you on it with an eighth basis, but because they kind of blended them in there, the APR for the most part, this is kind of what you're kind of seeing as average here on mortgage rates. All right, so if you guys got questions, please reach out. We're here to help you guys. If you like these videos, we greatly appreciate it. If you could support us by following and smash that like button. It greatly helps us out. And thank you so much for watching. We do appreciate you guys, and we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.